everyone, I'm Sumaira Abidi and we're coming to you live from the news pit at CNBCTV 18. We're celebrating Mutual Fund Day, and who better to celebrate it with than Feroze Azeez of Anand Rathi Private Wealth Management. Feroze, always a pleasure to have you, and it's more fun because here we are talking about funds.
Yeah, absolutely.
And it's really corny, but we've seen a lot of money flow not just into mutual funds, but within that into the balance space. Is there anything that we're missing over here? I mean, what does the savvy investor know?
See, the balanced funds have had an enormous influx of money, from 56,000 crores to almost about a lakh and a quarter, the top 10 schemes of balanced funds. That's a lot of money flowing into balanced funds. I think it's important to understand, and I think there are some benefits to a balanced fund, and people are very keen to exploit those benefits. And sometimes when you actually measure those benefits, they're not as big as they sound. Like a tax benefit of a balanced fund, on even a crore rupee investment, it's just 12,000 rupees tax benefit vis-a-vis mixing the two funds yourself, like large cap fund and a debt fund. So the benefit is just about 12,000 rupees, but tax actually has a large motivation to this influx of money.
So maybe they're just marketed better, is it?
I think they are marketed better. When you're speaking of marketing, they're also marketed as a lower risk relatively, but if you measure risk, they're not as little risk as they're portrayed to be. So a person has to be a little more conscious that the risks are not so little.
All right, but in any case, it's a good option to have as one of the funds in your portfolio, right?
Correct, definitely. For a person who has not too much money to invest, a balanced fund is a good solution, but he needs to know what he expects from it and not expect something which is really high.
Fair enough. Okay, so if someone were to go about constructing their portfolio themselves, let's get some mutual fund picks in then, right? From the large cap space, you've chosen the Kotak Select Focus Fund as well as the Mirae Asset India Opportunity Fund. Now, both of these are schemes which have been well ranked, well liked, and have performed well as well. What is the particular reason you've chosen these two and nothing else? I mean, given that past performance is not really any indication of how things might shape up, right?
Correct. You're absolutely right, Sumaira. I think important thing is these are the two large cap funds. Now, if there's a universe of almost about 100 large cap funds, picking two of them is an uphill task, right? And there has to be a logical reason to pick those two. In my opinion, very importantly, if you're looking at a fund, you have to know who's the fund manager and what his capability is. Going beyond the fund name and going to the person behind the scene is very, very critical. Now, for example, if you look at the Mirae fund, Nilesh, who's a very
fabulous fund manager.
Fabulous fund manager. And when you're managing a large cap fund, it's important to have your capability to pick the right sector, which I'm sure Nilesh has very clearly exhibited. When you're managing a mid-cap fund, on the contrary, you need to be very good at stock picking. But when you're managing a large cap fund, your capability to identify the right sectors is very critical. So Nilesh does that very well. Now, if you look at Kotak Select Focus, Harsha, who's managing that fund, I think both these gentlemen have shown immense capability of allocating the right amount of money in specific sectors. Then coming to past performance not being an indication of the future, which you rightly pointed out.
Not that I doubt either Nilesh or Harsha's, capabilities. I really do think that they're amongst the best, better fund managers.
Correct. What happens is every fund has an attribute which tells you whether the performance will sustain or not sustain. So if you do that analysis, then you realize that these two funds will actually have sustained performance, which sometimes after good performance, bad performances follow. But in this case, in my opinion, the future prospects also look bright.
All right, so that's those two large cap funds. We have some questions which are trickling in. Nitesh Chaudhary wants to know about the Mirae Asset. Well, we've already spoken about that, so I hope you've got your answer there. Ankit Agarwal wants to know if he can invest in debt funds and if they're better in terms of tax savings. So I know it's, we're almost at the year end, and a lot of these tax saving questions are going to start coming in. So not just debt funds, if you want to give somebody a tax saving plan as well.
See, I think when you're doing tax saving under the Section 80, it's important to have the least lock-in for your money, because contemporary situations are going to be very different when you look at long periods of time. For example, PPF has a 6-year lock-in. Go for things which have the minimum lock-in because it's a dynamic world. So that's ELSS, Equity Linked Savings Scheme. Point two, don't invest lump sum when you're doing tax savings, because you can do an SIP and do the recurring thing. Like Sumaira, you rightly pointed out, fag end of the year, there's everybody rushing in to make sure that their taxes are safe. It's not a good idea. If you could set up a systematic investment plan and solve this mystery for the next 5 years, you'd be good. Do that. And third point is, when you're doing tax saving, also make sure that the element which you're using, like ELSS, Also, the returns which you make on that are also tax-free. So you get a double tax break, not just a tax discount, but you get tax-free returns as well.
Yeah, you know, there was a time when at the end of the year, I'd always find myself, when I was, you know, much younger, of course, always find myself short of money at the end of the year, and that's because all of my money would go into either tax planning or insurance and henceforth and so on. Then, of course, you started SIP and things became a lot better, Feroze, I must say. All right, up next, we have Bhavani Singh, who writes into us and says that they have the IDFC Premier Equity, HDFC Mid-Cap Opportunity Fund, HDFC Child Investment Plan, and the Franklin India Smaller Companies Funds. Are these good funds for a time horizon of about 15 years? Collectively, he's putting about 10,500 into them.
Correct. I think. Let me pick out two distinctly important things in what you read out. One is IDFC Premier Equity. It's very important to know the fund manager and also know when the fund manager or the company's chief investment officer changes. Like Kenneth Andra, they left IDFC about a year and a quarter back. So a person actually has to reevaluate the strategy of staying invested when things like this structurally happen. Second, which I noticed, was the HDFC child plan. Investment has to be separate. Insurance, again, I think it's a very good marketing strategy to associate an investment with your child's well-being. So those are typical marketing gimmicks, and you should never try and take these insurance plans as investment venues. So use mutual funds, use term plans to protect your child in case there's an eventuality, but never mix these two.
That's a fair point, actually. And, you know, for the uninitiated, Kenneth Andrade was the original alpha manager, actually, in the industry. So he's, of course, now raising money for his own fund. All right, Piyush Agarwal has written in to us. He says his term horizon is only 3 or 5 years. As well, for another goal, he has a term horizon of 1 to 2 years. So he wants to know which funds would work well in this limited time.
See, I think if you're looking at the first time frame was how much?
3 to 5 years.
3 to 5 years. The 3 to 5 year category, I'm sure you can look at equity, because what's going to happen is liquidity is going to be rushing into the market. Capital markets are definitely going to have a flight of capital from the debt side, real estate side to equity. So not letting your 3-year goal get diluted. Put equity for your 3 to 5 year goal. I'm sure you'd be significantly better off than debt. So the 4 funds, out of which 2 we have already spoken of, the large cap category, Mirai, Asset India Opportunities, Kotak Select Focus, 2 large cap ones. In the mid cap category, you can look at Canara Robeco's emerging business fund, and then you can definitely look at another mid cap fund which is managed by Chirag Setalwad, HDFC Mid Cap Opportunities. That should be a good portfolio. From the 1 year to 2 year kind of time frame, you will have to stick to arbitrage funds, because arbitrage funds will give you tax-free dividends. Don't go into a debt fund, because you will need to stay invested for 3 years to get your tax efficiency. So in the arbitrage category, look at a Kotak arbitrage fund. It's a good fund for your near-term goal.
All right, Feroze, we have another portfolio question coming in. Gagandeep Singh says he has the Franklin India Blue Chip Fund, Reliance Small Cap Fund, ICICI Pru Value Discovery Axis Long-Term Equity Fund, Kotak Select Focus. He wants to know, are these good funds? He wants to invest another 3,000 rupees via SIP, and I think he has written earlier that his time horizon is 15 years. So he wants to know if he should add on anything to it, or if he can put this 3,000 rupees, I suppose, incrementally in one of the funds that he has.
I think he can add on one fund, because his portfolio is skewed towards the large cap category as far as I could hear. So I think you can add one mid cap fund, HDFC Mid Cap Opportunities, and any investor, not just this specific investor. I think for all of us, it's very important to see this regulation change which SEBI has brought in recently, which will have a lot of restructuring in funds. So mid-cap categories will be truly mid-cap. So please make sure that during this transition phase of consolidation as per the SEBI regulation, which will make things far more clearer for us as investors, I think you will have to keep a little more high frequency watch, and then review your portfolio after the fund managers have realigned as per the SEBI regulation, which has actually very, very good for the investor. So,
you know, Feroze, it's interesting you've brought this up, because despite it being announced that this is coming, right? There's no escaping it. A lot of NFOs are still coming out. So what does the investor do? Is an NFO in the interim a good idea at all?
See, NFOs largely are marketing ploys because investor also, unfortunately, sometimes seeks interesting stuff, and the dull, boring stuff, which actually makes him money, is not as attractive as it used to be. So NFOs, you should then generally stay away from it as a thumb rule, unless there's something which is very different, which you can't get it in an old fund which already has a track record. So stay away from NFOs. Wait till for this consolidation in the mutual fund industry, and I think it's a big one. Fund managers were not acknowledging this till the past few weeks, but now they've come to terms that it's actually a big change, and for the good, in fact.
All right, so maybe these were already in the works when it got announced. All right, Vidhay Vege, one of our regular viewers, has sent me a nice emoticon. So hi Vidhay, thanks very much for writing in again. He wants to know about the IDBI Mutual Fund House. So you haven't sent us a scheme, but as a house, anything in particular you want to say?
See, I've personally, from experience, realized that the mutual fund industry has 42 asset management companies. If you get the 6-7 large asset management companies, you're perfectly fine. I think they cater to most of it. So don't dilute your asset management company strategy, because talent, good fund management talent, is going towards these consolidated large 8 AMCs, which is where you should pick from. And unfortunately, IDBI is not one of those.
Oh. All right, Ambuj Nema writes in to us. He wants to know if you can suggest one good small cap fund. Now, this is a space that has exploded, right, in the last 1 or 2 years. Are there still good ideas over there?
Yes, I think it's very important when you're picking up a small cap fund, the strategy of identifying which are the funds which don't have a very overvalued portfolio is critical. I think Franklin Smaller Companies Fund is one which does not have a overheated underlying stock basket. So I would go with that and still not feel very insecure to put money at these levels of the small cap indices.
All right, but you know, that having been said, Ambuj, I do hope that it's not the only fund in your portfolio. I do hope that you do have other large cap funds as well. All right, we have another query coming in from Akash Kumar. He wants to know what do you think of the Motilal Oswal Most Focus 35 as well as their dynamic fund?
I think Motilal Oswal as a fund house done very well in the equity space. Should you go in for Focus 25? I still would not recommend Focus 35. The answer is no, because their consistency in terms of beating the benchmark has not been very, very good. Sometimes they beat the benchmark with a handsome margin, and sometimes they underperform the benchmark. So that's a little high risk, and I would stay away from it, and then I look at larger funds which have hugged the benchmark more closely and had lesser risks.
All right, finally, one more question. Okay, sorry, we've already answered that, my bad. All right, well, on that note, we have to bring this to a close. Thanks very much, guys, for watching. Feroze, as always, thanks very much for doing the honors. Always fun to have you around.
Super fun, Sumaira.
All right, so we're going to see you next week, again on Thursday at 1 p.m. Thanks very much for watching, and happy investing.